Morning, everyone, and thank you very much for joining me. This is the Morning Market Review. It's Monday, it's the 24th of April. My name's Russell Shaw. I'm a Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Unfortunately, we don't have camera today, but should be back up and running tomorrow. I just want to bring up our disclaimers. In the meantime, can you see the screen and can you hear me? If you can just confirm those two for me. Okay, thanks, Shadrach. Awesome. All right, let's just bring up the commentaries disclaimer. I'll keep this on screen for a few moments. And just our references, market scope and trading view. We'll start off with trading view, and it's a continuation of last week. I've got the 2-year yield at the top, and I've got the dollar at the bottom. And last week, I actually found a very frustrating week. I found it a tough week. The markets generally moved sideways. When a market's moving sideways, it's very difficult to really trade because there's no swing, or the swings are very short and then reverse. And we've got very much the same at the start of this week. So with that said, I guess the message here is caution. Caution until we get more direction. Take a look at the US 2-year yield. It's in no man's land. So we use these bands to try and gauge some sort of directional bias. When it's in what we call zone 1, which is the upper blue, upper red, we tend to get a movement up. So in this case, yields were moving up. At the same time, greenback was moving up. And what's subsequently happened is you can see that we have moved into the neutral area between the two blue bands. And I think the market's waiting for more information here. The idea is the Fed very much a driver of the market at the moment, but the interest rate policy is, well, it's there's a dichotomy between what the Fed is saying. The Fed's saying that they're going to be relatively higher for longer, no rate cuts. Markets are expecting rate cuts, and I guess the tension between those two has actually put us into the neutral area. And if you take a look what's happened with the dollar, it's back in the neutral area. And when the dollar's in the neutral area, I think it affects the whole market, because the dollar, in terms of our analysis, tends to be the first instrument that we analyze, and that tends to ripple through to other instruments. So the fact that we have this neutral area probably, and we'll look at other instruments in a moment, probably rippling through to other instruments. What I can tell you though is that the dollar's Bollinger's are starting to narrow. And the narrowing of the Bollinger's tends to suggest the calm before the storm. In other words, there should be an expansion in volatility. Volatility cycles tend to be fairly consistent, whereas price cycles are much more difficult to analyze. The volatility cycles, thanks to Bollinger Bands, a little easier to analyze. And I think that something is going to happen with the dollar, some sort of catalyst. Either there's going to be a break in the inflation, and I think if there's a break in the inflation, we see the dollar move into zone 3. Zone 3 is the lower blue, lower red. Or if we get a stickiness, in that inflation, well, then the Fed's going to have to do something about that. That would be dollar supportive. Let's just bring up market scope. I think it would be easier to analyze on market scope, where we've got a little bit more space. You can see the US dollar weekly pattern. This is a pattern that we've been looking at for quite some time. It hasn't completed because it hasn't broken the neckline, but there is a it does look quite toppy, and if you take a look at the RSI, it is below 50. The longer it stays below 50, as we've said many times, the more pressure it's going to put onto the greenback. Now, let's just take a look at the last 3 weeks, because this is really where we are at the moment. And you can see, if we go back to the candle, the third last candle, what do we have there? We have a spinning top, or a doji. Any which way you want to look at it, it's effectively a candle of uncertainty, where you've got bulls trying to take the price up, bears trying to take price down, neither succeeding, and the price closing fairly flat for that week. Now we go to last week's candle. What do we get for last week's candle? We get further signs of uncertainty, and that makes it really tough for us as traders. What do I mean by uncertainty? Well, we can look at this on a number of levels. The first level is, of course, it also looks like a doji. But not only is it a doji, it's what we call an inside week, an inside period. Its range is completely inside of the week before it. In other words, bulls were reluctant to take price above the previous week's high. Bears were reluctant to take price below the previous week's low. So it was completely inside of this week's range, and that makes for uncertainty. And then if you take a look at the actual structure, it's also a doji. Bulls try to take price up, were rejected. Bears try to take price down, not such a big tail there, not such a big shadow, but it was rejected nevertheless. And then we come to this week. Now, of course, it's only Monday. There's a lot of trade ahead of us. But where do we start this week? It's an inside week. So at the moment, there is no real momentum behind it to take price up beyond last week's high. No real momentum to take it beyond last week's low. And we're going to have to see some sort of direction here, because that direction then would ripple through to other instruments. Let's just go down to the daily chart and see what we're looking at here. And the daily chart, you can see slap bang in the middle, neutral area. Okay, we are getting that squeeze over here, but at the moment it's just not showing any legs either to the upside, either to the downside. Take a look at the stochastic. The stochastic, one of my favorite momentum indicators, is moving sideways in no man's land. So that's the first instrument that we're looking at, and really what sets off, I think, a chain reaction, and it's just looking flat as can be. And if it's looking flat as can be, we have to be cautious. Does it move into zone 1? Is it going to move back into zone 3? Let's just go down to the hourly chart, get some sort of directional bias here. And the directional bias is to the upside, but I want to be very cautious with the signal here. There is very low volatility. Okay, so we want to keep an eye on the EMAs. The EMAs must develop that angle and separation to that northeasterly direction, and the stochastic must make it into the upper quintile and hold. If we can do that, then potentially getting some sort of directional sense here, perhaps going into zone 1, perhaps getting above last week's high. But at the moment, okay, we've got a pretty flat market. In fact, what we can do is we can just box it. You can see, you can put it in a box. Okay, so some sort of rectangle. And if we want to take a look at resistance, this R1 level looks exceptionally strong. You've got R1, resistance 1, resistance 2, resistance 3, a whole bunch of resistance here. So it's looking very tight at the moment. Given that the dollar is looking so tight, let's see what's happening on the euro. See, I would expect euro to be similar, but let's just take a look at the charts. And we'll work our way down to the hourly. Let's just go back to the weekly chart here. And let's take that out. whilst we have that topping pattern on the dollar, we do have an uptrend on the euro US dollar. You can see we've got a series of higher troughs followed by higher peaks, but this 110 is certainly a psychological level. It's finding a ton of resistance right here. Every time it attacks that 110, it gets pushed back. I think that there is potential to break it if that dollar pattern completes. All right, but the dollar at the moment moving laterally. There does seem to be some positive momentum on the weekly, but let's just take a look at the last 3 candles, just like we did with the dollar here. And let's bring in an arrow so we know which candle I'm referring to. So if we go back to the third last candle, yes, there is some direction with the real body. So there is a blue candle here, but take a look at the upper wick and the lower wick. There are signs of resistance at 110, and then there's support sort of, where's this? This is from 107 and above. And effectively, all the bulls that try to push price up, they lost control at this candle's high. All the bears that try to push the price down, they lost control at the candle's low. And then what happened last week? It's an inside candle, inside period. What do I mean inside period? Its range is completely inside the previous weeks. So bulls are reluctant to take price up above this candle's high. Bears reluctant to take price below this candle's low. And what do we have is an inside week. There is slight bullish tendencies. Why do I say that? Because, well, there's a buying tail here. So you can see last week the sellers lost control at last week's low, but there's really no range here, no real movement here. So let's just put this together. The dollar, the first link in the chain of causality, it's looking quite flat. Well, that flatness seems to have carried over to the euro. Euro looking quite flat. Take a look at this week's candle. Now we've got a lot of trade ahead of us. However, it looks like a inside candle as well. So the lack of real direction on the dollar reflecting lack of real direction on euro. Let's just go into the daily chart, see what's happening there. All right, it's perhaps looking a little healthier than dollar because it's in, at least it's in a directional zone. I still would look at the dollar for as a driver. So if let's just go through to the dollar here. If the dollar pushes into zone 1, back to euro, then I think we're going to fall back into the neutral area here. What is interesting is that the stochastic has turned up slightly. We're going to have to monitor this over the next few days to see if the euro stochastic makes it up to here. I would expect US dollar to be coming down. That's not what we're seeing right now. So there's a little bit of ambiguity in terms of we're seeing this. We see this dollar cross here, go back to euro. Okay, euro, the stochastic here just not really filling me with a whole lot of confidence. And then if we go back down to the hourly for the euro US dollar, well, there is some sort of movement to the downside. We've got a cross 1, we've got a cross 2. Now, if the EMAs pick up angle and separation to the southeast and the stochastic makes its way to the lower quintile, then we're going to look at the dollar. We would want to see the dollar doing the exact opposite. Then we start getting some sort of direction. But just like there was overhead resistance for the dollar, there's underlying support here around about this S1 area, just a little deeper than the S1 area, but you can see support 1, support, beg your pardon, support 2, support 3, support 4. So this S1 level looks quite strong as well. So let's just put that together. S1 looks quite strong for the euro. Go to the dollar, and we can see that R1 looks quite strong for the dollar. So resistance support seems to be quite powerful at the beginning of the week. Let's take a look at the DAX now. So now we're moving away from the currency markets. Now we're going through to the risk markets. Let's see what's happening on the DAX. Okay. Again, you guys should know this chart fairly well. The trend is looking really good. Higher trough, higher peak, higher trough, higher peak. Last week, not too bad a week. It is a bullish candle. Not too much range there. Let's go through to the daily chart. Okay, so the daily chart is in zone 1. We've got a good looking stochastic. The stochastic, the longer it holds in that upper quintile, the stronger the underlying momentum, the higher the probabilities of higher prices ahead. Now let's just let's clean this chart up. Let's take the ellipse out, take this one out, and take this. And given the zone 1, given the uptrend here, so this has been really one of the, I think one of my favorite charts for this year. We are at central pivot. We're going to open the cash market in less than 2 minutes. There does seem to be a nice level of support here. Okay, right at the central pivot. Here is resistance turn support. Here is resistance turn support, 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 resistance, support. So this level here, which is around 15,900, round about there, certainly a level that the market is paying attention to. But we want to be very careful here because we haven't got the triggers yet. So we need to see some positive triggers from the EMA. We want to see some positive triggers from the stochastic. And then, okay, the stochastic needs to make its way back into the upper quintile and hold. And then there could be something happening. If we don't get those triggers, okay, then obviously we've got to be very careful and see if perhaps the S1 level comes in with some sort of support. So definitely one to add to your watch list. Just be very, very careful here in terms of predicting rather than reacting. That's the DAX. I want to take a look at just one last chart. I want to take a look at the cable chart. If there's any questions, you can go ahead and type those in. But cable's a very interesting currency pair. It's really performed exceptionally well since its lows last year, around about September, and let's take that out. We've got the RSI nicely above 50. Okay, again, I would say this really needs to be a dual analysis dollar pound, just like you're doing a dual analysis dollar euro. Do dollar pound. If the dollar pushes down, that would potentially be a driver for cable upwards. We are at this resistance area. It's holding quite firmly. If we go through to the daily chart, you can see we're in zone 2, but take a look what's happening to the Bollinger's. So just like the dollar Bollinger's are starting to squeeze, so is the cable Bollinger starting to squeeze. stochastic in no man's land at the moment. And if we go down to the hourly, okay, I think it's worth just keeping an eye on some sort of triggers here. The real story behind cable is that we're at the upper resistance level. We're getting ready to kind of challenge through this 125 level. But dual analysis, go down to the US dollar, see if the US dollar starts looking to complete the head and shoulders. If we're looking, then look at the euro, see if the euro is responding, then look at cable, see if cable's responding. So I think that there is a distinct lack of volatility from the dollar side. That needs to sort itself out. But then if that sorts itself out, we've got some instruments for the watch list. Take a look at the DAX as well. DAX is at a support level. Just need to see if those triggers materialize. If those triggers materialize, we may have something on the go. We just need the momentum to really hold under that. Remember, with trading, stop losses and risk management is needed for every single trade. That goes without say. All right, any questions? Go ahead and type those in. At the moment, it's a very tough market because of the lack of volatility, but the squeezing in the Bollinger's seem to suggest that something's going to happen. So we just need to be patient here. There's going to be a catalyst. As soon as we get that catalyst, I think there's going to be a nice expansion here for us. So we just need to be patient at this particular time. All right, nothing coming through. So what we'll do is we'll conclude at this point, and we shall pick it up tomorrow morning, see if the markets have developed to into something that's looking like swings. Have a really good day ahead of you, a good evening ahead of you, and we shall chat tomorrow morning. Thanks very much, guys.